Welcome to Money Monday on Business Edge. Well, it is simple to forget that what goes up can also fall down while the market is booming. But because economic slowdowns are frequently cyclical, there could be another recession in the future, as some have speculated. So are there short-term investments that can protect against economic realities that we are seeing in the business and economic world? Well, right here on the show, I have Victor Aluyi, Senior Vice President, Head Investments, Sankore Global Investments, to unpack this and tell us if that is possible. You're welcome, Victor. Thanks for joining us on Business Edge.
Thanks for having me. Morning.
Looking at the global economic trends, talk about inflation, hiking interest rates, aftershocks of the Russia-Ukraine crisis, and even dwindling stocks. Is there likely to be another form of recession coming up globally?
Well, I mean, it's not totally certain that we're going to head into a recession, but I think we can characterize the phase that we're heading into as a slowdown. Whether or not we then have a recession, can be another thing altogether. However, one could actually even argue that the U.S. economy, for instance, is already in a recession, right? We've had 2 consecutive quarters of GDP declines. However, the National Bureau of Economic Research in the U.S., who typically makes the call on whether the U.S. is on a recession or not, hasn't made that call. Now, if you look at the what I describe as the tripod upon which the global economy stands, you're looking at the United States, you're looking at Europe, and you're looking at China. These various regions of the world are, challenged quite significantly. Like you mentioned, for the U.S., it's very, very high inflation. I mean, the last inflation print that we saw came in at 9.1%. That's the highest that we've seen in about 40 years, right? If you look at Europe, inflation is also very high. In the economic bloc, we have inflation at about 8.6% at the last print. The aftermath of the Russia-Ukraine crisis is essentially being felt more in Europe, really, and that has led to what I describe as a cost of living crisis, where we've seen inflation skyrocket quite significantly across Europe, and we're also seeing interest rates being hiked to try and tame that inflation. And if you look at China, the COVID zero COVID policy, which has instituted some lockdowns, particularly in the first quarter of this year, coming into the second quarter of this year, has significantly reduced the growth potentials or growth capabilities of the Chinese economy. If you also look at the challenges with the real estate sector, I mean, that sector accounts for almost 25% of GDP. The challenges that we've had with that sector recently just basically alludes to the fact that the sort of growth that we're going to see in China this year would largely be subdued. As a matter of fact, first quarter GDP came in at 4.4%. The expectation was that economy was going to grow at 4.8%, and that is even significantly lower than the 5.5% target that has been set for the Chinese economy this year. So if you look across board, what we certainly are seeing is a strong potential slowdown, across the globe. I think one of the major support that the U.S. economy continues to get is that the labor market is still in really strong shape. Job numbers that were put out on Friday quite strong. The expectation was that the economy would have created 250,000 jobs, but ended up creating about 528,000 jobs, just alluding to the fact that the underbelly of the economy vis-a-vis the labor market remains really, really strong. So also, if you look at household saving in America, you're looking at anywhere around 2.5 trillion. So all of those provide some kind of significant buffer for the U.S. economy. So on balance, we certainly are heading into a significant slowdown. Whether we do tilt into a recession really remains to be seen.
All right, so I can understand you mentioning US, UK, and of course China's economy being the major drivers of economies of other countries all over the world. But then if you had to talk about short-term investments, which would you say can serve as insulation against a possible recession, or even if there's going to be an adverse slowdown?
Well, I mean, typically, once you get a slowdown, risk assets are out of favor. And by risk assets, I mean equities and the like, because they are intricately tied to the fortunes of the economy. So as the economy slows down, performance obviously on those fronts will also slow down. Future cash flow and by extension, the value of those companies tend to reduce. So typically, risk assets will be out of favor, while people would prefer to just preserve their wealth at this point in time. And I think that, fixed income instruments in money market instruments can provide that sort of buffer, because remember, the economy is slowing down, so in that period, really, the idea really isn't around growth. The idea really is around preservation. And, money market instruments, depending on the type and depending on the region that you are in, can certainly provide that sort of succor that helps you to preserve your wealth through the uncertainty.
Okay, finally, Victor, before we let you go, how do you even determine stocks that can outperform others during a critical time like this? What are those parameters quickly?
I mean, like you said, the economy happens in cycles. So there are companies that make products that, you basically use regardless of the economic cycle that we're in. And those are essential goods, right? Those are stuff that we call consumer staples. So companies that operate in those sectors of the economy will still remain resilient, particularly when they don't have pricing power. They will remain resilient regardless of the economic part of the cycle that we are in. So, yeah, I think that's something to certainly look out for, because they will certainly provide, decent wealth preservation and also some good upside as well.
All right. Thank you so much, Victor, for joining the conversation. Definitely we'll have you back on some other time. So there you have it. Looking at the issue now, what we get to understand now that is that when you talk about stocks, one of the recessions that we are facing ourselves now is the fact that we need to look at ways whereby we can invest money so that we do not lose out on the stocks that we have. So right now we get to go on a break, and when we return, it will be time for NC4 to watch.
And we're wrapping things up with a few stories we're keeping our eyes on. This is NC4 to watch, and we start in the north of the continent, where the Central Bank of Egypt announced that its net international reserves fell to $33.143 billion in July of 2022 compared to $33.375 billion in June, which is about a decrease of $232 million. Now, Egypt's international reserves consist of foreign exchange, gold, special drawing rights, and net loans from the International Monetary Fund. In East Africa, the Nairobi Securities Exchange has added 85 billion Kenyan shillings in investor wealth in the last 2 weeks, showing no sign of pre-election jitters as retail investors continue to buy up cheap stocks. The bourse's market capitalization stood at 2.21 trillion Kenyan shillings at close of trade on Friday, having gained 4% in 2 weeks. And still in the region, Kenya Airways wants South African Airways to leave some of the routes it operates in Europe and West Africa for it, as the national carrier seeks to expand its reach ahead of the planned formation of a pan-African airline. The Kenyan carrier signed a strategic partnership framework with SAA last November, which formed a key milestone towards launching a joint continental airline. And finally, we wrap things up in West Africa, where the Nigerian government has projected that debt servicing will cost 10.4 trillion naira by 2025, according to the 2023 to 2035 medium-term expenditure framework and fiscal strategy paper. This is a 182.66% increase from the 3.69 trillion naira budgeted for debt service in 2022. And that's our show for you today. Don't forget to follow us on social media. We are at News Central TV. You can also download our mobile app. You can subscribe to our YouTube channel and watch us on the platforms we are available on. And don't forget, tomorrow there will be no Business Edge because we'll be covering the Kenya elections live right here. We'll kick things off at 4 a.m. West African time, which is 6 a.m. East African time, as Kenyans head to the polls. Kenya Decides is live on News Central. I'm Tolu Lokwe. Adelere Balogun. Do have a fantastic day.